Hello, Market Watcher. I'm David Ravel, and this is Value Side for Friday, June 18. Today, labor, the forgotten dimension of the economy. Then the latest corporate results, as well as today's economic news, coming right up. It's easy to equate how the economy is performing with how the stock market is doing. Currently, with all the major averages either at or near all-time records, we assume that this means that the economy in general is performing well. And of course, with the tremendous stimulus that has been put in the hands of people now have cash. So things appear to be going along just fine. So it came as a bit of a surprise to many on Wall Street when yesterday's release of the initial claims for unemployment took a sudden jump higher. Analysts had expected that after 7 straight weeks of declining claims, it would just continue this week. In fact, they'd projected another 7% decline in initial claims for unemployment this week. After all, the economy is doing well, isn't it? In fact, we saw initial claims for unemployment jump back above the psychological barrier of 400,000, coming in at 412,000 for the week just past. Equity markets quickly sold off on the announcement, although they did regain some of their footing later in the session, with the Dow and S&P 500 closing only fractionally down for the day. But it was in the bond market that we saw the most profound effect. Bonds closed significantly higher on the day and have continued their rally in this morning's pre-market trading. Due, I believe, to the bond market's assessment that this economy is not as strong as stocks would indicate. And to understand why, we need to gain some historic perspective on all this, and the labor market can give us just such a perspective. We begin with the initial claims for unemployment released in yesterday's report. Now, initial claims are those workers who, for the very first time, after being laid off, have now reported to their state employment office to request their unemployment benefits. So it's the leading edge, if you will, of the unemployment picture. And currently, as noted, these initial claims have been coming in at about 400,000 per week. Initial claims had peaked during the height of the economic lockdown at more than 5 million. So it might seem like this 400,000 is not so bad. Indeed, we're making progress. But put in historic perspective, with the significant exception of the Great Recession of 2008 and 2009, for 20 straight years, initial claims had been below the 400,000 mark. And for the last 5 years leading into the pandemic, initial claims had been averaging below 300,000 per week, well below where we are even now. And this indicates that businesses are continuing to lay off workers at a rate far above the recovery level needed in this economy. We see this same anemic performance level in 2 other measures of the labor market. In long-term 27-week unemployment, currently this measure stands at 3.7 million who have been out of work for nearly 7 months. This is 300% higher than the level of long-term unemployment just before the pandemic. Back then, long-term unemployment was only 1.1 million. Today, 3.7 million. Finally, the overall labor force shows perhaps the best measure of just how this economy is performing. Again, just before the lockdown began, in January and February of 2020, the total number of workers in the U.S. was 164 million. Immediately, that number dropped by 8 million workers as businesses and corporations around the country laid off worker after worker. Now, we have recovered 4 million of those lost jobs, but that's only halfway back to the pre-pandemic levels. In other words, we've recovered all right, but from the labor market's point of view, we've only recovered halfway. We have a long, long way to go to full recovery in this economy. Speaking of inflation, Japan reported as expected that the May inflation reading came in at a negative 0.1% for the month. Now, there are no major earnings reports on the calendar for today. And that's ValueSide.com for Friday, June 18. I'm your host, David Ravel. Please visit our new website, ValueSide.com, for our latest news, reviews, and today's show notes.